Hello everyone and welcome to topic 2 in our GACT 5113 Managerial Accounting course. Today we will be discussing some of the most important concepts in management accounting. These concepts are absolutely essential for understanding how businesses plan, control costs, and make informed decisions. By the end of today's session, you should be able to understand the key concepts used in management accounting, explain why concepts like cost behavior and cost classifications matters. Apply these concepts in various real-world business situations. Let's begin with some basic cost concepts. Fixed costs are costs that don't change no matter how much you produce, such as rental or insurance. Variable costs, on the other hand, increase or decrease based on the activity volume, such as raw material purchase. Direct costs can be directly traced to products, such as the wood as a material that you need to use to make a table. Indirect costs, such as electricity, are harder to trace to one single product. Now, let's talk about how costs behave. Relevant costs are future costs that will change depending on the decisions you make. Some costs, on the other hand, are past costs that can't be recovered, so they should be ignored when making decisions. Opportunity cost, on the other hand, is the cost or the value of the next best alternative that you give up. And marginal cost, that's the cost of producing one more unit of something, such as a product. Now, understanding how to classify costs helps with planning and control. Product costs are tied directly to productions such as materials and wages. Period costs, such as office rental, are recorded as expenses in the period that they incur. We also have controllable costs, which refers to those costs that managers can influence, as well as uncontrollable costs whereby they cannot have control over the costs. Costs can also be committed, i.e. hard to change, or discretionary, such as advertising, which can be adjusted. There are several techniques used in costing. Absorption costing, for one, allocates all costs to products such as fixed overhead. Marginal costing only considers variable costs. Activity-based costing, or ABC, assigns overheads based on what activities drive those costs. Standard costing uses predetermined costs to set benchmarks and control expenses. Contribution margins is what's left after subtracting variable costs from sales. It tells us how much is available to cover fixed costs and generate profit. The break-even point is where total revenue equals total cost, and therefore there is no profit or loss. These tools help us in making pricing and production decisions, especially when planning profit. Let's now move to budgeting. A master budget is the overall financial plan for business. A flexible budget adjusts based on activity levels. Zero-based budgeting requires justifying every cost from scratch, whereas incremental budgeting, on the other hand, is based on last year's numbers with some adjustment. Management accounting is all about supporting decisions. We use these concepts to decide things such as, should we make a product ourselves, or should we buy it? Or should we accept a special order at a lower price? Or which product mix gives us the most profit? Or should we shut down or continue a part of the business? All this requires accurate and relevant cost data. To keep performance on track, we use tools like variance analysis to compare actual results against the budget. Responsibility accounting holds specific managers to be accountable for the parts that they control. We also use balance scorecards and KPIs, key performance indicator, to track both financial and non-financial outcomes. So, to summarize, today we have covered the essential cost and control concepts in management accounting. Understanding how costs behave, how they classify them, and which tools to use for decision making will make you a more effective managers or even accountants. These concepts are the building blocks for budgeting, pricing, performance tracking, and strategic planning. That's all for today's introduction sections on this topic, and we see each other again. Goodbye.